Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. I am Michael Bull, your host. Thank you for joining us. Our show today is brought to you by CommercialAgentSuccess.com. Check it out. It is the ultimate in commercial broker training. These are 21 videos. They're cloud access. They come with slide deck, action notes, and forums. Even the most experienced brokers around the country love them. Learn more at CommercialAgentSuccess.com. Well, we have a fantastic show for you today. You know, one of the things that we're always trying to think about in commercial real estate, no matter what part we do in it, is what do we expect moving forward? What's going to happen next year? We've all heard the saying, skate where the puck is going, right? Well, you'll love today's show. Please welcome my guest. It's John D'Angelo. He is Real Estate Solutions Leader with Deloitte. John, good to see you. Thank you for joining us.
Good to see you too, Michael. Glad to be here. Thanks for having me.
And each year you guys put out an incredible report. This year it's called 2025 Commercial Real Estate Outlook. Of course, it's 2025. If it's an outlook, here we are in October of 24. And briefly, John, remind our listeners and viewers how you guys do this report and when did you start it and finish it and when did it come out?
Sure. Yeah. No, thanks, Michael. So we do a survey. So we do sort of primary research every summer for the year ahead. Usually it depends on kind of what we're looking for and what our hypothesis is. On who we reach out to. This year it was 900 sort of C-suite executives, of both real estate owners and real estate investors. So that spanned 13 countries. And I forget how many we sent out, but we got 900 responses, give or take. So that happened in July. So the polling and the survey responses are a couple months old, and then look at the results and draft the report that you've got in your hands. It was released last week, midweek last week, so kind of hot off the presses.
All right. Well, awesome. And as you look at kind of 2025 outlook from your respondents and your research, what do you think about next year? What's the kind of the overall theme?
Yeah, so our respondents, I think, sort of validated our house view. The theme of the report is turning the corner. As you and I have talked about in the past, and certainly leading up to our conversation here, transaction volumes have been muted is probably the polite word for the last, call it 2.5 years. It looks like from the optimism that we're seeing in our survey responses, as well as kind of early signals in the marketplace, the next 12 to 15 months look like turning the corner is the right way to put it. So, with transaction volumes in particular looking like they're set to rebound with a bunch of money, kind of coming off the sidelines back into commercial real estate that's been, kind of waiting for some signals that we've hit valuation bottoms, as well as the cost of capital starting to go down.
Yeah. Well, that's good. And another thing that's good is if for you guys watching on video, thank goodness a black cat just went across the screen, but didn't go in front of you. So it's not bad luck. The black cat looked like a black cat went behind you. So we're all good. Everything's going to be good for 2025. If that black cat walked right across in front of you, I'm like, oh no.
Exactly. No, yeah, we're good, Michael. That's Betty.
We're going to be in trouble.
Betty's optimistic, apparently.
That's good. Thank you, Betty. Well, so looking at the timing, considering the timing, what did your respondents think about interest rates moving forward and the impact there?
Yeah, so I guess and again, this was in July, but I think sort of consistent with popular expectations. And if you go back to July outside of the U.S., we'd seen European Central Bank have some rate declines already, but expectations were that we'd see some rate cuts between then and the end of the year, which have materialized. So starting to see cost of capital go down, and optimism that that's going to continue. which is great, right? So sort of the cost of capital, cost of debt, going down from elevated levels over the last couple of years, which certainly you and I have both seen have had a dampening effect on transaction volume. So it looks like that is sort of set to go down. And we'll see what happens, right, over the next couple of months between now and the end of the year. Our house view is that we'll see likely a couple more cuts before the end of 2024, which should have a positive effect on kind of both refinancing as well as investment activity.
Yeah. Well, I'm seeing the same thing on the optimism about transaction volume. We're brokers, so maybe we're kind of front line, but all of our listings, the activity on them picked up, I'd say about 4 times as much activity, even and also more sellers looking to feel more comfortable putting properties on the market. So that's kind of what we're seeing on the front line as well.
Yeah, it looks like the sort of bid ask spread is tightened.
Mhm.
So sort of sellers realizing that there's likely more buyers in the marketplace, and the valuations have stabilized, which is all. That should all have the effect of increasing transaction volume.
Yeah. So, what did your respondents think about performance for commercial real estate moving forward?
Yeah, a lot of optimism about fundamentals improving. So kind of across the board, I think across all asset classes or all property categories, I think the numbers were like 70% of respondents expected, kind of fundamentals, both in terms of leasing activity, of the basic NOI for properties, and transaction activity would all improve in the year ahead. Office being the laggard, across property sectors, but even office was showing sort of 60% or better, optimism about those categories of fundamentals improving in 2025. And the others, really kind of across the board, looking like people were thinking, sort of 70% of respondents expected improvements in fundamentals. In contrast to the last couple of years, Michael, seeing a lot of optimism about the year ahead for commercial real estate.
Yeah. Well, I'll agree with that. I feel the same way. It's been kind of a dismal couple of years as far as transaction volume, and it's seeing the activity really pick up pretty rapidly, and so it is encouraging. Um, but it, of course, always depends on geographic areas and sectors, right? Where are the groups really looking to deploy capital in 2025?
Yeah, we're seeing a big, and maybe not surprising, sort of digital real estate. So think data centers. We at Deloitte, we lump cell towers, data centers together in digital real estate categories. So way up at the top, and that's not, I guess that's not new news. We're seeing a lot of commentary about our data centers, now really sort of becoming core, as opposed to alternatives. So big winner there. Also seeing multifamily, have a big rise. Kind of not surprising, manufacturing is way up at the top of the list. So, with CHIPS Act, and Inflation Reduction Act, incentives, kind of reshoring of manufacturing. Sort of seeing a bunch of people targeting actual manufacturing, on U.S. soil being a big opportunity. And then sort of continued seeing logistics or distribution space, as a top category. Um, so those were some big movers. In particular, multifamily sort of shot up this year. I know you look at office quite a bit. Office is sort of holding steady in mid pack. I was a little surprised, if you look at where people are thinking about putting out money, that senior housing fell, and is as low as it is. Likewise, student housing. If you ask why, I don't have much for you, because I think kind of the long term tailwinds of sort of senior living and assisted care. It looks like there's still a bunch of demand drivers there.
Yeah, there would seem to be, and, our we had a lot of senior housing properties just not moving for the last couple of years, and that now all of a sudden are moving, so I don't know if our little company in the Southeast is any inclination, but based on what we're seeing more activity, so maybe that'll pick up, but you also mentioned, student housing, so there's more or less interest in student?
It's rock bottom. Of the 15 categories we asked about, um, yeah, student housing is at the bottom of the list. It,
Mhm.
it surprised me.
Yeah, that's interesting. So, you have a black cat and a black dog?
There is a bunch of activity in the background. Yeah, hopefully people watch the video. Yeah, so a black dog and a black cat.
Uh,
Exactly. They've got a complicated relationship.
there you go. Yeah, but at least the cats and dogs, living together and enjoying life, that's a good thing. Um, well,
Exactly.
so, on property types, that's interesting. So what about, geographic areas or countries? Did you see anything, jump out to you there?
Not particularly. We're not seeing a bunch of. I guess the one thing is we're not seeing a bunch of cross border capital flows.
Mhm,
I think in contrast to prior years, it looks like capital is more or less staying put where it's originating.
hmm,
Um, but we didn't ask a lot about geographies, because it is a global report. We didn't ask about
mhm,
sort of particular areas of the U.S.,
mhm.
but
Yeah,
more about
yeah. No, that makes
cross-border
sense. So
capital flows. And the finding there was it's kind of staying where it
mhm,
is.
yeah. What about, sustainability? And we've just had another hurricane. It's caused lots of problems, and obviously insurance has been a big issue. And but with all that going on, we also have kind of the financial issues with a lot of the operations, right? With costs going up and taxes going up, and some properties like office, having impaired revenue. Can we deal with this in our financial situation? Can we go green?
It's interesting, Michael. I spend a bunch of time in our firm talking to clients about what they're doing, particularly for sustainability retrofits.
Mhm,
Um, and there was like a couple of years ago, there was a ton of interest in how do we deploy capital? How do we avail ourselves of tax incentives and credits to maybe spend whatever 60 cents and get a dollar's worth of benefit in capital investments in the physical plant of properties. um, Honestly, we've seen the interest wane. People are as you rightly say, with concerns about cash flow. The kinds of things that we're seeing people invest in for sustainability retrofits are things that have kind of a near term ROI. So the way those numbers worked is, we asked people sort of, sort of sustainability retrofit and investment and performance in your commercial properties. Is it sort of core and central to your company values? Is it dependent on an ROI return? Is it, balance between ROI and a sustainability benefit? Um, and are you not even thinking about it?
mhm,
So the good news is there's not a lot of people in that last category I rattled off, but there's really kind of a cluster in people looking for a balanced return for the actual hard dollar ROI of investments and getting a sustainability benefit. And then the people that are just focused on hard dollar ROI, that's the distribution is like 60% in those two categories. With something like, I don't know, I think it's 22% of people saying, look, it's just kind of core to our company's mission. We think it's important. We think it differentiates us. So I think the story there, Michael, to I guess give you a summary of a simple question is people are very focused on where is the return on investment, particularly in the absence of regulatory drivers for investment. I suspect that we're going to see that change and come back into prominence as there's more clarity about regulatory requirements. And as pressure sort of comes back from investors and occupiers. But the last year has seen a little bit of foot off the gas.
Yeah. Yeah, it's interesting. I'm selling a very nice office building, and I looked to their last certification for sustainability and energy efficiency, and it was 2016. I'm like, okay, uh, they're just worried about cash
Yeah,
flow. Uh,
exactly.
yeah. Well,
And
of course,
that just echoes the conversations we've had.
yeah, yeah. What about inflation and construction cost? How big of a concern is that from your respondents?
It's the top concern that we had when we asked people, what are you worried about?
Mhm.
The top of the list is that inflation stays high and stubborn. Um, so just as they think about what what's a worry or what could impact revenues, yeah, that is up at the top of the list. Less so about cost of capital and availability of capital. So I think there's sort of more confidence back at the top of the conversation about cost of capital going down. But if you say, well, what are you worried about? It's that doesn't happen. That inflation stays high, and cost of construction or cost of goods, even cost of wages stays high. So it's on people's minds, Michael, and we'll see how it plays out. But I guess looking at, I don't know if you saw the jobs report from September that came out today, but it's looking like increasingly we're heading towards a soft landing. So, may that be the case.
Yeah, I hope so, and it does look like it to me. But what about concerns about global conflicts? Is there any concern there from the respondents? And then I don't know if this works with it, but any concerns by respondents on election results? Us, being in a presidential election year here.
Yeah, we didn't poke into the election results specifically, but certainly in conversations in the marketplace, it's on our clients, minds here in the next, 4 weeks, 5 weeks. But yeah, geopolitical, concerns, again, the polling was, in midsummer. But certainly the conflict in Ukraine and Israel is a it's on people's minds. I suspect if we were polling today, given given activities over the last weeks, it would probably factor higher. So yeah, it's a concern, and it showed up in midsummer. I think it's on people's minds. So if you think about the things that might get in the way, it's high on the list, Michael.
Yeah, yeah, it certainly is. And what about artificial intelligence? It seems like that's on everyone's mind today. It's already impacting a lot of industries. What about commercial real estate in the future there?
Yeah, we're seeing real progress in, and thankfully, it's not just focused on generative AI, but it's kind of all forms of AI. So we're seeing more interest and more investments being made in AI-based solutions. Certainly if I think about the volume of conversations that we continue to have over the last year, it's very much a board topic. I'm speaking to a couple different public real estate company boards over the next couple of weeks about AI solutions and what their role is and what's happening. Um, so seeing continued investment, continued interest, and things moving from kind of piloting and into production. Um, so listen, certainly in the kinds of things that we do, sort of seeing increased budgets and increased activities towards AI solutions is good for the industry. And thematically, I think where that's going, Michael, is just shifting the way people spend their time to more value added, more thinking efforts. It's not kind of wholesale the machines replacing people, but it's more helping people do the things that we're naturally good at and spend more time on it.
Yeah, well, it makes sense. And somebody asked me the other day if I was getting into artificial intelligence, and I said, "Look, that's the only kind of intelligence I've always had." So, what do you mean? Of course, I'm in artificial intelligence.
I'm all in.
What about? Let's talk about careers. I mean, it seems like the folks in commercial real estate. A lot of us look like us. Uh, and a little more mature. What about the future career situations in commercial real estate? Do respondents have any comments there?
Yeah, listen, I think the topic we just talked about and the workforce and being attractive to the workforce that's going to keep fueling our industry are really important, Michael. We know, and we've been watching this for the last half dozen years. Kind of a retirement cliff is still hanging over commercial real estate. So I think the number is 40% of people employed in our industry are going to retire over the next decade. And a big key is how do we attract and retain the next generation of talent that's going to keep the industry moving forward. So um, the kinds of things that we're seeing are the digital natives, so Gen Z and millennials just aren't willing to do kind of heavy manual repetitive tasks the way the industry has always sort of worked. So so that's, I guess, tying it back to the topic we just talked about. AI, generative AI, and automating processes, I think is critical to attracting and retaining the next generation of talent. And we're sort of seeing that reflected in our clients and where they're spending time and what they're doing. So, automating processes. And then the other thing that's interesting is, spending time upskilling or investing in existing talent to help them, sort of stay relevant is a big deal.
Yeah, that's a great idea and a good thing that's happening. And I think a lot of young people, when they think of real estate, they think of somebody selling houses and making millions of dollars and doing deals on their phone, like the reality
Right.
TV shows. And they don't really understand commercial real estate, do they?
No, and just in having helped the operations of a bunch of commercial real estate companies, we've just been an industry that is, and we've talked about this in the past, it's sort of slow to adopt new technologies or invest in people and processes. We've been sort of very comfortable throwing people at processes and at the problem, and making them do heavy manual redundant work. And it just we're seeing more and more digital natives aren't rejecting the industry; they're just rejecting that way of working. It doesn't help them, in the skills that it takes to sort of rekey information from one spreadsheet to another. It doesn't help them grow in their careers, and they're seeing that. And the companies that that kind of manual intensive process characterizes are seeing a lot of turnover. So it's just I think we're for whatever reason, hopefully lots of good reasons to attract and retain the right talent. People are investing in their core operations.
Yeah, well, that's a good thing, and from the real estate schools that we interview seem to be have they have good they have good people joining, they have attendance is up, but I think there's a lot more room. There's a lot more room in our industry for commercial real estate, and then when it comes to the kind of the brokerage side, there hasn't been really good training. There's a few good trainers out there, but I saw, a lot missing, and that's why I created commercialagentsuccess.com. It's like, all right, I'm not going to be here forever. Let me give this information to some of the younger folks and, keep this business rolling.
Yeah, yeah,
Right.
exactly.
What else in the respondents' response to you guys. What else jumped out to you in this report that maybe you didn't expect?
Yeah, I'm thinking about the things that people are worried about. I guess back to the topic we talked about a few minutes ago for kind of climate risk.
Mhm.
I was surprised, not to invalidate our research, but I was surprised that respondents, in the list of things that people are worried about, regulatory driven climate reporting or climate investing and actual climate change showed up kind of at the bottom of the list of people's worries. So if I think about what surprised me, that was pretty high on the list. I mean, just given sort of what we're seeing for asset resiliency and risk, related to climate events. I think it kind of flies in the face of what we're actually seeing in the world, and as you rightly pointed out, the cost of insurance, and how that has skyrocketed in particular areas for commercial real estate. So, I suspect that's an anomaly, Michael, that we'll see sort of change and get reflected in the numbers, in the next year, the next couple of years ahead. It's just the realities sort of come back to roost for commercial real estate owner operators and investors.
Yeah, well, that makes sense. And when we look at performance of all the sectors, it seems like overall, most every sector, as you mentioned earlier, is performing pretty well. Albeit office, office has some great properties that are doing well. We sell medical and government lease doing extremely well. Of course, a lot of the really nice newer Class A top of the line buildings doing extremely well, and then a lot of submarkets. But overall, office not doing well. From your respondents in midsummer and when this happened, was there any thoughts on office and the return of office demand? Anything jump out there?
Just that I don't know that we poked into it specifically this year, Michael. But the consensus seems to be that we've kind of gotten to, notwithstanding kind of the big online retailers announcement that they were going back to 5 days a week.
Mhm.
Um, Notwithstanding that, it seems like in our client base is realizing we've kind of gotten to the new normal. We've gotten to some stability in actual physical occupancy. Um, but as you pointed out, it's not in our report. I was talking to the CFO of one of the big brokerages a couple of weeks ago that leasing activity in major markets has been tremendous over the last couple of months. So interesting, and I think just kind of bears out that people have gotten to a place where they're confident that we're kind of where we are and they can make decisions.
Mhm.
And leasing activities following that.
Yeah. Well, I'll give a prediction on Office, and I think probably 90% of my listeners would not agree with me. But my prediction is the Office will turn around faster than we kind of think right now. And my prediction is based on that some buildings are going to be torn down, and then some buildings will be converted to other uses, especially as tax incentives increase, because municipalities almost are going to have to get their urban core busy and their tax base up, and then some. The back to work and back to office, I think that's going to continue to slowly happen. So you'll have that demand, and then I think you're going to see new supply kind of really stop as the buildings delivered now are delivered, and then there's not going to be anything delivered for a while. And I think that's going to absorb and have a good market. And then then just the back to work, and then the normal kind of growth in markets like the Southeast and the Sun Belt and Atlanta. So I think things could turn around faster than and folks think. And I would love to invest in office. And I sell a lot of office buildings, but I typically sell them for the seller, so I can't invest in them. I'm representing them, but I think office, and it's interesting to note that none of your respondents really were interested in office, or I guess a really low percentage, right?
Yeah, exactly. And Michael, I'm not going to take the other side of that bet. I'm with you. I think the phrase "under demolished" for kind of permanently impaired, kind of the wrong product in the wrong place
Mhm.
is the right term to use. I think that's just going to go away and become something else. Some of it's going to get converted, but I mean, we've been watching this for the last couple of years. Certainly, we've got like big REIT clients that have kind of the trophy office have been doing great,
Mhm.
and that seems to continue to be the case. And you're right, there's not a lot of it coming online, particularly with the cost of construction and constraints around construction. So yeah, a lot of words to say. I'm not taking the opposite side of that bet.
Yeah. Well, it's interesting to see some of these nice buildings selling for $100 a square foot average, or some even less, that might cost 600 a foot or more to build them. It's going to be, it almost seems like a hard bet to lose. John, final thoughts on this year's 2025 commercial real estate outlook.
Michael, I think it's kind of back to the top. I think we are in the precipice, or maybe have already turned the corner. So really echoing our respondents' sentiment that the next 12, 15 months is going to be good for both fundamentals and for transaction activity. So yeah, I think optimism is probably the right word, and it's great to see reflected in our polling. So I'm excited to see how this plays out in 2025, and how close what we're talking about tracks to what actually plays out.
Ah, that's great. And for you guys are just listening and aren't watching, I am doing a stupid dance right now. I mean, I, I love the optimism. I'm ready for transaction volume to pick up, performance to continue to improve. John D'Angelo, thank you, sir. Thank you for joining us.
Thanks for having me, Michael. Good to talk to you again.
All right. And thank you for joining us around the country. Hey, let us know what you think. If you think I'm completely wrong in office, let me know. If you want to sell off it, let me know. Maybe I'll buy it, or I'll sell it for you. But thanks for sharing the show. Thanks for connecting with us. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate sales, leasing, and advisory services. Visit bullrealty.com or reach out to me directly. My email is michael@bullrealty.com. By ShareFile, designed with real estate and other highly regulated industries in mind, ShareFile offers secure digital solution to simplify workflow and improve collaboration. Visit sharefile.com. By Commercial Agent Success Strategies, 21 cloud-accessed agent training videos. Learn more at commercialagentsuccess.com. You're invited to subscribe to the show wherever you listen or watch the show. You're also invited to subscribe to a weekly email announcing the show topic and guests at creshow.com. Thank you for watching, listening, and sharing America's Commercial Real Estate Show.